Imagine building a portfolio so reliable, you could set it and forget it for decades. Today, I'll show you 3 Canadian powerhouse stocks that could fund your retirement, your kids' education, and more, while you sleep soundly at night. We're talking about a leader in energy infrastructure, a global financial pioneer, and a giant in essential infrastructure. These aren't just stocks, they're pillars of the Canadian economy and could be the foundation of your financial future. I'll break down why these companies are so powerful, what makes them tick, and how they can provide steady, reliable growth for years to come. If you want a blueprint for long-term wealth, you're in the right place. Smash that like button, share this video, and subscribe for more investing insights. Let's dive in. First up, Hydro One, ticker H on the Toronto Stock Exchange, TSX, a titan in Canadian utilities. If you're looking for a company that's woven into the very fabric of Ontario's economy, this is it. Hydro One is the backbone of the province's electricity system, quietly powering millions of homes, businesses, and critical infrastructure every single day. Electricity is essential. Hydro One owns and operates nearly all of Ontario's high-voltage transmission grid, making it a near monopoly. Their network stretches across vast distances, connecting remote communities and bustling cities alike, ensuring that the lights stay on no matter what. The barriers to entry are massive, financially, physically, and regulatorily. You can't just build a competing power grid, the infrastructure required is immense, and the regulatory approvals are daunting. This means Hydro One's position is protected from would-be competitors, giving it a fortress-like advantage. This monopoly status gives Hydro One an incredible economic moat and stability. It's the kind of business that can weather economic storms, market volatility, and even technological change, because the need for reliable electricity never goes away. Their business is regulated by the Ontario Energy Board, which means predictable, stable revenue and a government-guaranteed rate of return. The rates they can charge are set in advance, so there are no wild swings in profitability. This regulatory framework is designed to ensure both fair prices for consumers and steady returns for investors. For investors, that's a dream: steady, reliable cash flows and minimal surprises. You're not betting on the next big tech breakthrough or a risky turnaround story. Instead, you're investing in a business that generates cash like clockwork, quarter after quarter. Hydro One is a dividend machine, consistently paying and growing its dividend. That's income you can count on, even in tough markets. Over the years, they've built a track record of rewarding shareholders, making it a favorite among income-focused investors and retirees alike. Ontario's population is growing, and so is electricity demand, especially with more electric vehicles and data centers. As more people move to the province and as technology evolves, the need for reliable, high-capacity power only increases. Hydro One is perfectly positioned to benefit from these long-term trends. Hydro One's balance sheet is rock solid, with an investment-grade credit rating and prudent financial management. They keep debt levels in check and maintain strong relationships with lenders, which means they can invest in growth without taking on excessive risk. This is a foundational defensive stock, perfect for long-term investors who want to sleep well at night. When you own Hydro One, you're not just buying a stock, you're buying peace of mind, knowing your investment is backed by essential infrastructure. The main risk? Regulatory changes. But the need for a stable power grid makes drastic changes unlikely. Regulators and governments know how critical Hydro One is, so any changes tend to be gradual and carefully considered. Hydro One is investing in modernizing its grid, making it smarter and more resilient, future-proofing its business. Upgrades to smart grid technology and automation help reduce outages, improve efficiency, and support the transition to cleaner energy sources. Every dollar invested in infrastructure is approved by regulators and added to their rate base, guaranteeing more earnings. This means that as Hydro One spends to upgrade and expand, its future profits are essentially locked in by the regulatory process. It's a virtuous cycle: invest, earn, reinvest, repeat. This cycle allows Hydro One to steadily grow its earnings and dividends, compounding value for shareholders over time. As an investor, you benefit from this steady, compounding growth. Your returns aren't just from dividends, but also from the gradual appreciation of the company's value as it reinvests in its own future. Hydro One is the anchor in any Canadian portfolio, providing stability so you can take calculated risks elsewhere. It's the kind of stock that lets you be bold with other investments, knowing you have a solid foundation. It's not flashy, but boring is beautiful when building lasting wealth. Sometimes the best investments are the ones that quietly do their job, year after year without drama. With electrification and decarbonization trends, demand for Hydro One services will only grow. As society shifts toward greener energy and more electric vehicles hit the road, Hydro One's role becomes even more vital. More EVs, more data centers, more homes, all need power, and Hydro One delivers it. The company is at the heart of Ontario's growth story, ensuring that every new development is powered up and ready to go. This is a stock to buy, hold, and let compound for decades. The longer you own it, the more you benefit from its steady, reliable growth. Institutions love it for its reliability, and you can own that same quality in your portfolio. Pension funds, endowments, and large investors all rely on Hydro One for stable returns, and so can you. Hydro One is as essential 50 years from now as it is today. It's a company built to last, serving generation after generation, adapting to new technologies and changing needs. When markets get choppy, you'll be glad you own a piece of the power grid. While other stocks may swing wildly, Hydro One stands firm, delivering stability and peace of mind. Don't underestimate the power of boring. Hydro One is a wealth-building machine. Over time, those steady dividends and slow, consistent growth can add up to a fortune. It's the perfect first stock for our Canadian Forever portfolio. If you're just starting out, Hydro One gives you a solid base to build on, teaching the value of patience and consistency. Start with the essentials. Start with Hydro One. It's the company that keeps the lights on, both literally and figuratively, in your investment journey. This is the core of our forever thesis, enduring advantages and clear long-term growth. Hydro One's unique position and proven track record make it a cornerstone for any serious investor. Hydro One checks every box: stability, growth, income, and resilience. It's all here. Simple, powerful, effective. This is a forever stock. It's the kind of investment you can buy, tuck away, and watch quietly compound for years to come. Let's move to our next pick. Next, let's add global growth and financial strength with Manulife Financial, ticker MFC. This is a company that stands as a pillar of stability in the ever-changing world of finance, and it's one that deserves a closer look if you're building a portfolio for the long haul. Manulife isn't just a Canadian insurer, it's a global financial powerhouse with over 135 years of resilience. From its roots in Canada, Manulife has expanded its reach to become a trusted name in financial services across continents, serving millions of customers worldwide. They've survived world wars, depressions, and financial crises, proof of a robust business model and smart management. Through every economic storm, Manulife has adapted, innovated, and emerged stronger, building a legacy of trust and reliability that few companies can match. Manulife's business is diversified: insurance, global wealth management, and a massive presence in Asia. This diversification means the company isn't reliant on just one stream of income, making it more resilient to market fluctuations and economic cycles. Insurance provides steady, recurring cash flow. People need insurance in good times and bad, and Manulife's broad product suite covers everything from life and health to group benefits and retirement solutions. Wealth management grows as global markets rise. As more people invest for their futures, Manulife's asset management arm benefits from rising markets and increasing client assets, generating fee income that adds to the company's bottom line. And Asia? That's the real growth engine. The region's rapid economic development and expanding middle class are creating enormous opportunities for financial services companies like Manulife. The rising middle class in Asia is driving huge demand for insurance and investment products. Manulife is perfectly positioned to capture it. With a strong brand and deep local partnerships, Manulife is embedded in some of the world's fastest-growing economies. Despite this, Manulife often trades at a low valuation, offering a margin of safety and upside for long-term investors. This disconnect between the company's fundamentals and its stock price can be an opportunity for those willing to look past short-term market noise. Like Hydro One, Manulife is a dividend champion, reliable, growing payouts that compound your wealth. The company has a long track record of rewarding shareholders, and its dividend policy reflects confidence in future earnings. Management is focused on innovation, using technology to improve customer experience and lower costs. Digital transformation is at the heart of Manulife's strategy, making it easier for customers to access services and for the company to operate efficiently. Their Vitality program rewards healthy living, reducing claims and boosting profits, a win-win. By encouraging policyholders to live healthier lives, Manulife not only helps its customers, but also strengthens its own financial position. Manulife is also less sensitive to interest rates now, thanks to a shift toward fee-based businesses. This strategic pivot means more predictable revenue streams and less exposure to the ups and downs of the bond market. The result? More stable, predictable earnings, exactly what you want in a forever stock. This stability is a key reason why Manulife is a favorite among long-term investors. With Manulife, you get a century-plus of resilience, global diversification, and exposure to the fastest-growing region in the world. Few companies can offer this blend of history, reach, and future potential. The risks, market downturns, and catastrophic events, but global diversification helps offset these. Manulife's presence in multiple markets and sectors acts as a buffer, reducing the impact of localized shocks. Long-term trends, aging populations, rising wealth, and the need for financial security are all tailwinds for Manulife. As people live longer and accumulate more assets, the demand for insurance and wealth management only grows. This isn't a stock to trade, it's a stock to accumulate and let compound. Over time, the power of compounding dividends and steady growth can turn a small investment into a significant nest egg. Pairing Manulife with 𝗗𝗚𝗏 gives you both stability and growth, a powerful 1-2 punch. You get the defensive strength of utilities and the offensive upside of global finance. Manulife is one of the world's largest life insurers, deeply integrated into millions of lives. Its products and services touch families, businesses, and communities across the globe. Management is laser-focused on shareholder value, with clear targets and disciplined capital allocation. They're not just growing for growth's sake, they're making smart decisions to ensure long-term returns. Ignore short-term noise. Focus on fundamentals and long-term trends. The market may fluctuate, but Manulife's core strengths remain intact. Manulife is a world-class company at a Canadian price. It's a rare opportunity to own a global leader without paying a premium. It's a bet on global prosperity and the enduring need for financial security. As economies grow and people seek to protect their futures, Manulife stands ready to meet those needs. This is why Manulife is our second forever stock. It's a cornerstone for any investor who wants both growth and stability. Add it to your watch list, do your research, and see why it's a core holding for the long term. Take the time to understand its business, and you'll see the value it brings to a diversified portfolio. It's a perfect complement to 𝗗𝗚𝗏. Together they form the backbone of a resilient, future-ready investment strategy. With these two, you have both defense and offense in your portfolio. You're protected against downturns and positioned to benefit from global growth. Now let's round out the portfolio with our third pick. We've covered stability and growth. Now it's time to add a global infrastructure powerhouse. Ready for global infrastructure? Let's go. On to Brookfield. Our third forever stock is Brookfield Infrastructure Partners, ticker BIP.UN, a global empire of essential real assets. Brookfield is not just another company, it's a powerhouse that quietly underpins the world's daily operations. From the electricity that powers your home to the data that streams to your phone, Brookfield's reach is everywhere, making it a foundational holding for any long-term investor. Brookfield owns and operates a diversified portfolio in 4 sectors: utilities, transport, midstream energy, and data infrastructure. This means they're involved in the backbone of modern society, ensuring that the lights stay on, goods move efficiently, energy flows reliably, and information travels at lightning speed. These are mission-critical assets, power lines, toll roads, pipelines, and data centers that the world can't function without. No matter what's happening in the economy, these assets are always in demand, providing a steady stream of income and stability for investors. Their utilities generate stable, inflation-protected cash flows, much like 𝗗𝗚𝗏. These assets are often regulated, which means predictable returns and less exposure to economic cycles. It's the kind of reliability that forms the bedrock of a forever portfolio. Transport assets, toll roads, rail networks, ports, let Brookfield profit from global trade and commerce. As the world becomes more interconnected, the need for efficient transportation only grows, and Brookfield is positioned to benefit from this ongoing trend. Midstream energy assets provide fee-based revenue insulated from commodity price swings. This means Brookfield can earn steady income regardless of whether oil and gas prices are rising or falling, adding another layer of resilience to their business model. Data infrastructure, towers, fiber, data centers, positions Brookfield for the digital future. As our world becomes more connected and data-hungry, these assets are set to become even more valuable, driving growth for decades to come. What sets Brookfield apart is its capital allocation expertise. The management team has a proven track record of making smart investments, knowing when to buy, when to sell, and how to maximize value from every asset in their portfolio. They buy high-quality assets, improve them, and recycle capital for higher returns. This disciplined approach means Brookfield is always looking for ways to grow and adapt, staying ahead of the curve in a rapidly changing world. This strategy fuels consistent growth and rising distributions to shareholders. Over time, investors have benefited from both capital appreciation and a growing stream of income, making Brookfield a compelling choice for those seeking both growth and stability. Brookfield pays out 60-70% of its funds from operations, targeting 5-9% annual distribution growth. This means your income from Brookfield is not only reliable, but it also grows faster than inflation, helping you build wealth over the long term. Their global diversification over 30 countries adds resilience and stability. By spreading investments across continents and sectors, Brookfield reduces risk and captures opportunities wherever they arise. Much of their revenue is indexed to inflation, protecting your purchasing power. In a world where inflation can erode savings, this feature is a powerful shield for your portfolio. Risks include currency fluctuations and geopolitical issues, but Brookfield hedges and diversifies to manage these. Their experienced team is constantly monitoring global events, making adjustments to keep your investment safe and growing. When you buy BIP, You're instantly diversified across hundreds of essential assets worldwide. This kind of diversification is hard to achieve as an individual investor, but Brookfield makes it possible with a single investment. Individual investors get access to assets once reserved for institutions. You're participating in the same infrastructure that powers cities, connects continents, and drives the global economy. The world needs trillions in new infrastructure. Brookfield is at the forefront of this mega trend. As governments and businesses invest in upgrading and expanding infrastructure, Brookfield stands to benefit from a massive long-term opportunity. You're not buying paper, you're buying ports, railroads, pipelines, and data centers. These are tangible, real-world assets that generate cash flow and have lasting value. These assets are hard to replicate, giving Brookfield a lasting advantage. Barriers to entry are high, and competitors can't easily build what Brookfield already owns. Pairing Brookfield with Hydro One and Manulife creates a robust, diversified, forever portfolio. Each company brings something unique, and together, they cover the essential needs of the global economy. Management is heavily invested alongside shareholders, focused on long-term returns. Their interests are aligned with yours, and they have a history of delivering results through all market conditions. If you believe in global growth, digitalization, and infrastructure, Brookfield is a must-own. It's a company that's built to last, adapting to new trends and technologies as the world evolves. It's a way to invest in the world's biggest, most enduring trends. Infrastructure, digital connectivity, and global trade are not going away, they're only getting stronger. Stable, inflation-linked cash flows and a proven growth strategy make this a top Canadian forever stock. Brookfield's ability to adapt and thrive in changing environments sets it apart from the rest. You're not just buying a stock, you're buying a piece of the global economy's backbone. Every day, billions of people rely on the assets Brookfield owns and operates. Brookfield is a sleep-well-at-night investment, managed by one of the best teams in the business. With their expertise and global reach, you can trust your investment is in good hands. Don't overlook this Canadian-based global giant. Brookfield combines the stability of a homegrown company with the growth potential of a worldwide leader. That's our third and final pick. With Brookfield, you're investing in the infrastructure that keeps the world running, today and for generations to come. Let's wrap up with your Forever Portfolio Blueprint, a strategy built on strength, stability, and the power of essential assets. There you have it, 3 Canadian companies you can buy and hold forever: Hydro One, Manulife, and Brookfield Infrastructure. Together, they form a diversified, resilient core for any long-term portfolio. These aren't just stock picks, they're investments in the essential services and trends shaping our world. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive tips and analysis, join the Stocks Galore Patreon community. Now tell me, which of these 3 stocks excites you most, or do you have another Canadian forever stock to add? Drop your thoughts in the comments. Don't forget to like, subscribe, and share for more investing insights. Thanks for watching. See you in the next one.